Welcome to the deep dive. You've shared your sources with us, and we're here to cut through the noise, give you that critical context you need. Today, we're really digging into, well, one of the biggest strategic plays in the digital asset world this year. That's Ripple's huge acquisition of Hidden Road. Now, the price tag is massive, $1.25 billion, but honestly, that dollar figure is probably the least interesting part of this whole story. What we want to do today, our mission, is to really analyze the massive strategic shift Ripple's making here. They seem to be moving hard from being known, mostly as a blockchain payments firm, to becoming a full-stack financial infrastructure provider, basically building a pipeline sitting right there between old school TradFi and the new world of DeFi. Okay, let's unpack this.
Right. So you see that $1.25 billion number, and the first thing you ask is, what exactly did Ripple get for that kind of money? And the answer is really institutional scale. And critically, the access that comes with it. See, Hidden Road, it's a global multi-asset prime broker. Now, for folks who aren't trading enormous volumes every day, think of a prime broker as, the central utility company for the big players, hedge funds, institutional traders. They're like the nervous system that lets a massive fund trade everything, stocks, bonds, crypto, derivatives all over the world without needing separate accounts and collateral everywhere. It streamlines everything.
And the scale of this utility company, the numbers are just kind of mind-blowing, aren't they? You mentioned Hidden Road clears around $3 trillion a year. $3 trillion in trades flowing through their pipes and serving over 300 institutional clients. That's just huge for a prime broker, especially one operating significantly in the digital asset space, which, makes you wonder, are they just buying a profitable business? Or is this more about paying a big premium to instantly get the regulatory licenses, the established systems, and maybe most importantly, that institutional trust, the kind that takes decades to build?
I think it's mostly the latter, yeah. Ripple basically gets the keys to the institutional kingdom here. By owning this infrastructure, they're not just partnering up. They become, and this is key, the first crypto company to actually own and operate a global multi-asset prime brokerage. That gives them control over the client relationships, the incredibly valuable data from that $3 trillion in clearing, and crucially, the power to build crypto-native products tailored exactly for what institutions need. You just can't get that level of control with a simple partnership. And it instantly gives them legitimacy, right, in the eyes of traditional finance, because Hidden Road, they have the track record, they have the licenses. That institutional trust, that's the asset worth paying the premium for.
Yeah, that makes sense. So historically, Ripple's been very focused, almost laser focused on payments tech, right? Cross-border settlements, the XRP ledger, the XRPL. But this feels like a massive jump, a complete strategic redefinition.
Oh, absolutely. It's a fundamental leap. They're moving into what people are calling the full Fintech stack. Payments used to be their main thing now. By adding Hidden Road's core services, the clearing, the financing, swaps, derivatives, FX, Ripple is building out this really comprehensive institutional pipeline. It's end-to-end. Think about it. The stack covers every big step a global player needs, from holding the assets custody to trading them to financing positions and, critically, tokenization. They essentially own the rails for the whole journey now, and that completely changes where they sit in the competitive landscape.
And it's not like this is some 5-year plan they're just starting. The integration, the utility, it's happening already. One of the clearest examples right out of the gate involves Ripple's own stablecoin, RLUSD.
Yeah, the sources are showing RLUSDs being plugged in immediately, used as collateral for brokerage products through Hidden Road. Can you unpack that a bit? Why is using a stablecoin for margins so significant for institutions?
It's absolutely crucial because it takes the stablecoin beyond just being, a way to move value around.
Yeah.
In TradFi, institutions post collateral, usually cash or maybe super liquid government bonds for their riskier trades like derivatives. So by positioning RLUSD Ripple's own digital asset as acceptable collateral for these multi-asset products, including traditional ones, they're basically injecting a crypto asset right into the core mechanics of prime brokerage. And that shows real utility, like day one. If you're a big fund needing to post margin for some complex trade, maybe now you can use RLUSD. That potentially opens up massive demand for RLUSD, tying its value directly to that huge $3 trillion clearing volume running through the system. What's really striking is how fast this merger seems to be creating this working, tangible link between the old financial world and the new decentralized one. It's not just talk about synergy down the road. We're seeing actual shifts happening now.
That's exactly right. We've already got proof points. Hidden Road, now with Ripple's backing, launched over-the-counter OTC crypto swaps for U.S. institutions pretty quickly after the deal was announced. That shows the institutional-grade plumbing is already being used for the biggest players, the ones who absolutely need that regulated setup.
And then there's the longer-term goal, the really disruptive part.
Mhm.
Ripple plans to actually move Hidden Road's complex post-trade operations. All the stuff that happens after a trade, the settlement, the clearing, the compliance checks. They want to move that onto the XRP ledger, onto XRPL. And that's not just about shifting data around, is it? It's about replacing a legacy system, probably built on things like spreadsheets, email chains, maybe T+2 settlement where trades take days to finalize. Replacing all that with a system that runs globally, 24/7, settles almost instantly, and has immutable records on a distributed ledger. That feels like the core efficiency gain they're betting $1.25 billion on.
Precisely. That's the bet. And if it pays off, it positions Ripple right at the heart of things. You've got traditional finance on one side, banks, funds, legacy brokers. On the other, you've got DeFi, blockchains, tokenization. Ripple is setting itself up to be the main connector, owning the pipes that link those two worlds.
Okay, so let's bring this back to you, the listener. Because this infrastructure play, it's not just abstract corporate strategy. It has real, tangible implications for the market. So let's break down what this means for, say, traders and also for long-term investors. First off, this kind of massive infrastructure build, it really signals, I think, that the crypto sector is maturing, seriously maturing. It tells you the industry is shifting, moving beyond just retail excitement and building out the heavy-duty institutional-grade financial rails. Rails built for serious, regulated, large-scale volume.
Yeah, and for the trader, it means you need to watch utility like a hawk. If Ripple's ecosystem expands successfully, it could mean much broader measurable use for XRP, for the new RLUSD stablecoin, and for the XRPL itself. Think about it. If institutions start clearing even a small percentage of that $3 trillion annual volume using services tied to these assets, that creates real quantifiable demand. And that demand is going to influence token flows, it's going to influence partnerships, and ultimately trading setups.
And then for the long-term investor, this looks like a play for a serious competitive advantage, right? A moat. By getting ahead, owning this whole comprehensive regulated infrastructure package, Ripple is trying to build something pretty defensible. They control the client link, the tech stack, the regulatory piece, all in one go.
That's the idea, build that moat.
That moat sounds pretty strong.
Yeah.
But let's be real. Any acquisition this big, this complex, it always comes with huge execution risk.
Yeah.
So before we get too carried away, what are the big hurdles? The main headwinds Ripple has to navigate now.
That's a really crucial point. Owning the infrastructure is one thing. Actually integrating it and making it work seamlessly is another challenge entirely. So yeah, this raises an important question. What are the primary challenges we should be watching? I think we can boil it down to maybe 4 major risk categories. First, and this one's massive, is regulatory risk. Buying a serious, heavy-duty financial services firm like Hidden Road throws Ripple right into the deep end of global financial regulation. We're talking intense licensing needs, huge compliance burdens, constant oversight from multiple agencies. They're playing in the most heavily regulated sandbox there is globally.
Okay, number 2 you mentioned is integration risk. Can we dig into that a bit more? What does that actually look like on the ground? You're merging maybe the decade-old, high-security traditional finance system with its own culture, its own legacy tech, into a faster-moving, blockchain-focused crypto company. Where do those friction points usually show up?
Well, the friction almost always appears in the back office. Those post-trade operations that Ripple actually wants to migrate to XRPL, that's where the headaches start. Old systems often weren't built for 2147 operation or, for instance, cryptographically secure settlement. They just weren't. So trying to mesh these totally different tech stacks, different ways of working, different compliance mindsets, it's notoriously difficult and expensive. You often need to retrain hundreds of people, force 2 very different operational cultures to somehow work together. That's where these big integration projects can really get bogged down.
Gotcha. Okay, risk number 3.
Third is just fundamental market risk. Look, buying infrastructure is a long game. The goal is obviously institutional adoption, but that might happen slower than Ripple hopes. Maybe macro conditions change, maybe regulators get cautious, maybe institutions just take their time. The point is, owning the infrastructure doesn't automatically mean revenue pours in tomorrow, that $1.25 billion investment. It might take a lot longer to deliver the expected returns.
Right, patience is needed. And the last one.
And finally, it circles back to token risk. The whole vision really relies on the utility of Ripple's own assets. XRP and that RLUSD stablecoin. They need to become the core collateral, the utility layer inside this new prime brokerage machine. If institutions don't actually start using RLUSD for collateral in a big way, or if moving operations onto the XRPL takes too long or proves too difficult, then some of the market excitement that followed the acquisition, it could potentially fade if that core utility doesn't clearly materialize relatively quickly.
Okay, so those are some significant risks: regulatory, integration, market adoption, and the token utility itself. With those in mind, what are the key milestones, the concrete things we and you, the listener, should be watching over the next, say, year or so to see if this massive bet is actually paying off? Well, the first one seems obvious, but it's critical. The deal actually needs to close formally. And just as important, how quickly do they get the necessary regulatory green lights in all the different countries they operate in? That timing tells us when the real deep integration work can even begin.
Exactly. Step one. After that, probably the most important technical milestone is tracking the migration onto XRPL. How much of that $3 trillion in annual post-trade volume can they actually genuinely shift onto the blockchain? And how fast can they do it? That percentage, that volume number moving onto XRPL, that's going to be the key metric for judging the efficiency success. We also need to watch for new products coming out under this combined Ripple Hidden Road banner. Keep an eye out for specific things like new derivative services, cross-margining capabilities, maybe new tokenized asset offerings. These will be the things that actually generate revenue and prove the synergy is real.
And maybe the most telling sign for the whole ecosystem's success, it'll be seeing real-world, large-scale institutional finance actually adopting RUSD. If big global players are routinely using RLUSD as standard collateral within this prime brokerage system, that signals true institutional buy-in. And that would be a huge win for the broader XRPL ecosystem.
Absolutely. And if you zoom out again, connect this to the big picture, this deal is really about owning the infrastructure. It's not just about developing cool tech anymore. Ripple seems to have realized institutions don't just want a new ledger, they need a whole suite of regulated, reliable services built around it. By buying the infrastructure, they get end-to-end control of the client, the pipes, the asset flow. And honestly, that mirrors a wider trend you see in fintech globally, companies buying up existing financial rails to better serve institutional clients.
Which brings us perfectly to our final thought. Something for you to chew on after we wrap up. Here it is.
If Ripple actually pulls this off, if they successfully integrate Hidden Road and manage to shift a serious chunk of that massive clearing volume onto the XRP ledger, how does that fundamentally change the game? The competitive landscape for XRPL versus other big blockchains aiming for institutional finance, think Ethereum, think Solana, will owning the regulated infrastructure end up being the ultimate differentiator? Something to consider. Well, that's our deep dive into Ripple's huge strategic move with Hidden Road. Hope you found this breakdown useful. And hey, if you did get value from this analysis today, please do consider subscribing to the channel, maybe leave a comment, give the video a like. It genuinely helps us out a ton, boosts our visibility with the algorithms, and frankly, it lets us keep making more content like this, exploring the future of crypto and finance. We really appreciate your support. Thanks for joining us.